Hey, good afternoon, everyone. This is Sage. So today we're going to be discussing the trades that I did or did not take, for what reason that I did and did not take them. One trade in particular, you're going to see how obvious the trade was. I'm so mad because this was the $20,000 trade. I'm not even exaggerating when I say that. So I'm going to be doing trade reviews, as you should grow accustomed to me doing. I'm going to break down the trades that I took, why I took them, why I shouldn't have taken them, and then we'll talk about the conditions in the market. So we started with a really nice rally, right? We were up almost 5% on QQQ. And then what happened is we started trickling lower. And the VIX, you'll see here in just a second when I pull up my chart, had a 35% move, maybe more, intraday on the VX trade that I discussed yesterday in the longer video. So let's jump into the charts here. Let's see exactly where we're at. This is the VIX, and this is the move that I was just discussing. So just check out the percentage move from trough to peak. We're looking at more. We're looking at a 20-point move. So 20-point move. So we rejected the 57 level. I want to bring something up. Generally, when we have these explosive moves here to the upside, it's never just one. You don't just peak out and then you give up that trade. That's not how volatility usually works. It usually works where you hit a threshold and then you hit that threshold once again. You make a lower high. That's what I was waiting for and still waiting for here. I'm waiting for a lower high. So I'm going to discuss QQQ and SPY and NQ, and I'm going to talk about all that stuff for sure. But first, I want to talk about the trades that I took, didn't take, the opportunities missed, and what we can do about improving our overall trading strategy. So if you're following along consistently, which I hope you are, I want you to start paying attention to my trading system. The trading system is not that complicated. It's pretty easy to follow along with. You're going to see a couple things on my chart that make my job easier for me to make decisions. But I was working today. I was working and was doing a couple things, and I missed the biggest trade. And if you're not putting alerts on, then you can miss out on opportunities as big as the one that I missed out on today. Let's talk about NQ. I did not fire on this signal in the chat. This was a mistake because it was early. So let's check out the 10-minute time frame here on NQ. These are the trades that I want to discuss. So I had a very good day with scalping yesterday. I caught the short here and then I caught the long. Right? And that's exactly what I did. So here we're looking at a signal at 3 o'clock in the morning, right? So you have a short signal here, you have a long signal here, you have a short signal here, and right around 7 o'clock in the morning, exactly at 7 o'clock in the morning is when I took this position. So I'm usually waking up about 5:30, do my exercise, do my stretching, stress about the market. I'm sure all of you are doing as well. And then I got a signal right here. So where are the confluence factors? The confluence factors are me using either a feature of delta. So delta, specifically what I'm talking about is cumulative volume delta, CVD, or you can use another version of this. You can use just something called volume delta. This is going to work as follows. As long as I'm doing my trade reviews, I'm going to explain this every time because I never know who is watching these videos for the first time, right? Maybe I would have said something 6 months ago, but maybe you don't remember, blah, blah, blah. It's very beneficial for us to go and talk about the same conditions over and over and over again because they shouldn't change. So the first thing that you should realize is the moving average cross. So the CVD and the volume delta, they're telling you the same thing. They're just presenting it in a slightly different way. This gives you a binary sense of if we're positive or negative on the candle that came in, but it doesn't give you directionality. So when you accumulate, if the tick before, literally the tick before is a positive tick, and then the next one is a positive tick, then the next one is a positive tick, that is a accumulative factor. So it's going to accumulate until it starts changing the directional bias. That would be the cumulative volume delta. That's exactly how it's represented here. The zero threshold line is the zero threshold line. It acts very similarly to what you see on your TTM. The TTM is nothing special. It's the Bollinger Band and the Keltner channels. So that's how this is calculated. So how this is calculated, it derives information off of the 1 minute time frame. I'm using the 10. So this is a very granular feature. If you're ever talking about order flow, all that is you looking at either level 2 data or just looking at the discrepancies between the imbalances or buy and sells. That's what you have here. So that's going to be represented for your volume delta as well, except you don't have a cumulative feature. You just have a zero cross line. Are you positive or negative? This works very similarly like your computer. It's all switches. It's all binary functions. It's either a 1 or 0, and any combination of that is going to produce a specific outcome. So it's very similar to that circuit feature. But I like the CVD a little bit better, so you understand the differences. So my CVD, let's just bring that up. That was telling me, okay, we're above the zero line, and let me point something out here real quick. We have a slope. we have a slope that was coming in, and that slope is something that I detected. But if you just look, the TTM is also looking to fire on a squeeze. So how do I know that there's a squeeze maybe looking to fire? I'm looking at not just the zero line, right? I'm not just looking at that, but I'm looking at the slope. I'm looking to see if there is a zero line that's looking to cross over. So in this situation, my 5 and my 21 actually caught onto the signal earlier. Let me prove that to you. Let me remove my indicator here, and let me just talk about the 5 and the 21, right? We're just looking at that. That is the indication that the 5 and the 21 is crossing. So you have a signal here, you have a signal here. We all know if you're using moving averages, or maybe you never use them, maybe you're using RSI, MACD, whatever, you got a lot of undulations, and you got a lot of lag, right? There's a lot of lag. When it comes to exponential moving averages, it's not as laggy, but everything is going to lag. Only thing that doesn't lag is price action and volume. Even the volume delta, by a fraction of a second, thankfully I don't have to be that precise, is going to lag a little bit. So we have a slope here, but you're saying, hey, Sage, you're kind of lagging on the slope right here, aren't you? Yeah, you are, but let's look a little bit closer. I want you guys to understand how these calculations are done. If we look, you have a more significant slope on the push, roughly about 7:50, actually later than that, 9 o'clock in the morning. But where do you have a detection of a slope that maybe I wouldn't have picked up on, but looks like we did have it here on the tool? Well, you have a little bit of a slope off the zero line right here, do you not? So that was being picked up off of the TTM. There was some volume that was coming in. I'll bet it wasn't all that significant, but we had confluence factors. That's what I want you to take away from this. So we have 1, 2, 3, maybe 4 things lining up. Do we have a strong engulfing candle to the top end? No, we don't have that. So let's remove these drawings, right? Let's get rid of all that. And then let's just bring down the indicator because we're not using it at that resolution. And let's go back and take off the 5 and 21 moving average. Let's just take that off. And let's see what the detection mechanism is ultimately picking up. Are there confluence factors here? On the indicator, you can see very clearly that there's a 5 and a 21 cross. That's how this works. So here, if I want to take that off because it's too much information on the chart, I can do that. That was just a visual representation. So I have a little bit of a trend analysis here, right? The different calculation, but ultimately the entry criteria is the EMA, volume, and if it's cumulative or not. So if that is starting to pick up and there's a slope to that, right? Because the slope does matter. If there's a significant slope to it, I want to detect it. So when those 3 things line up, I fire on the trade. So I did. I went live. Some of you were in my live session this morning, and I said I was in the trade before I got on, right? Because I fired on this trade roughly at about 7, I think it was 7:14 or something like that. So I fired on that trade, and right around here is where I got off. But if you're looking at my threshold, right, that's that threshold right there. There's nothing complicated about that. It's either a calculation of your TWAP or your VWAP. It's not that hard. So how many points did I catch on it? I caught roughly about a 140-point move. I made $1,000 on this trade. That's what it was. I posted it in the profits channel. So $1,000, cool. Could I have ridden that trade all the way up to right here? I would not have taken the trade off at the top. I want to make this very clear distinction. That's not going to happen, right? Let me come a little bit close. This is off the 10-minute time frame, mind you. I'm not looking to take trades off the 1 minute because I want to be so pinpoint precise. I don't need to be. I really don't need to be. So I have this one trade, rode here. I took it off because I was doing a live session. I didn't want to multitask. And I probably would have been tagged at that candle. So how many points realistically would I have actually taken if I was monitoring the trade at 100% capacity? 350 points. I mean, it's very clear, right? It's very, very clear, the signals here. This is something that's repeatable and something that you can do over and over and over again. Sage, why didn't you take this trade? Well, I was sleeping around 5 o'clock in the morning. So my alarm was going off. I definitely got these alerts right here. I do have a timing filter on the indicator, so I have it on right now because I want to see if there was anything that was signaled sometime in the eves of the morning or the evening, whatever. So I caught wind of that here, right? I'm up about 6 o'clock in the morning, then I'm looking at my charts, and then all of a sudden that prints. All right, I'll fire on the signal. Just one contract. That's it. Doesn't have to be anything heavier than that. So then the next signal, which you can obviously see, I'm going to talk about this, but I want you to notice the confluence factors. It's not the fact that you rode, or maybe some of you did take this trade. I don't know. I was complaining about this position all day because it's a trade that I would fire on 10 times out of 10. So where am I going to hold this trade? Where am I realistically going to hold it? Let's say I want to take it right here, right? Because I'm going to be tagged right there on that threshold. Let's just make up that hypothetical. That's a 340 point move. It's a 340 point move. You guys would kill for a 10, 20, 30 point move with futures. That's 340 points, right? And I'm not even exaggerating. That's the signal. Now, how many confluence factors do I have there? I'm going to point every single one of them out. This is the one trade that I did personally not take. I didn't take this. I try to go long right here using the 5-minute time frame. On the 5-minute, now that I look at this, I was breaking above the threshold and I never actually got a signal. So I went off of my own experience. I didn't lose a lot of money. I lost $200 on this trade. So I ended the trading day with a little bit over $750. So it's not a bad day. I'm not saying it's a bad, I'm not complaining. But the signal, the opportunity that was missed just because I was doing a whole bunch of other things, right? I was doing things in the background, and I was also giving a class early not this afternoon, around this time. I was getting prepared for a class around this time. So that signal fired. The trend held, right? That's that trend analysis right here. It held. You can argue, right? I'm not arguing. I'm not saying anything different. That, let's say I take it at half staff, at half that candle. It fired earlier than half that candle. But let's just say I take it at this threshold right here. That's a 450 point move, 450 point candle, or not candle, excuse me, point move that I should have caught just using this trading system, right? It's not different for a long or short. I'm not saying that you're going to catch moves like this on every trade you take. Obviously, that's not the case, right? When you go back, this is probably the most extreme scenario that I've seen on this indicator. It's going to tell me, wow, it's fluctuating all over the place. So an extreme volatility. And this is probably one of the most extreme examples I have ever seen in my trading career. Even here, it did quite well. It signaled a good short. It signaled a long that now in my book is legendary. And then it signaled a short, stopped out, short, stopped out, long, stopped out, short, stopped out. So how many trades did I have to go? I didn't take all these trades, but how many of these positions would I have gone through before I'm getting to my next high quality trade? Well, I can argue that we went through 1, 2, 3, 4 stop outs. Let's say I lose about $600 there, and then I make it back right here. Cool, but I've already had 2 banger trades. So I did. I had my 2 trades, and I was done. I was definitely done. That's how that works. Let's go a little bit further back. If I'm looking at this, there's huge fluctuations here. You're probably saying there's a misalignment on the indicator. No, there's not. The misalignment is not there. It's firing on the 5 and the 21 cross. You can calibrate the indicator. You can calibrate it to whatever trading system that you are trading. I trade 5 and 21. I trade CVD. I trade TTM. I trade the Keltner channel and the Bollinger Band specifically on the TTM indicator. I know how that works. I know how to calculate that. And then the CVD is telling me here, we're on the 0 line. This was a legitimate signal that maybe it should have caught, right? There's a filtering mechanism here that probably was filtering this trade out. So this is a legitimate criticism for sure. It should have definitely signaled it there because I have my 5 and 21 cross. I have my 5 and 21 here. I probably should have got a reversal signal, but there is a safety feature here. If you're having too much of this, if you're having too much of erratic nature, it's not going to fire on every single cylinder. Now, it underperformed on this day. There's no question that it did. I'm not trying to argue that it didn't do that. Now let's go and see maybe just a couple days before that. Do we have underperformance here? I don't think we do. Did we underperform here? No. Did we underperform here? I don't think we did. Did we underperform here? Would I have gotten wicked out on this candle? More than likely. So yeah, this is a stop out signal. What about there? So I have 1, 2, probably have 3 legitimate signals and then 1 where I got stopped out. I can live with that. And the rest, the rest is just a given. It's looking off the 5 and the 21. So let's go back here. Where it's going to overperform, where it's going to do unbelievably well is when you have clean price action, not perfect, but clean price action enough where you substantiate a move. It's going to have a feature where it's telling you, all right, there's a trend here. There's a little trend. You got stopped out on a trend. Maybe I would have taken a stop out here, and you can re-enter the trade with an entry mechanism because here I don't want to get too many duplicates. I actually built this in here. So if I don't want too many duplicates, I can have this feature either on or off. Okay, so that's cool. But ultimately, I'm putting myself in a situation where if I'm taking, and this is off the 5-minute, mind you, I'm not taking trades off the 5-minute, I'm using the 10 because I want to filter out as much noise as possible. So just sticking with the 10 or the 15, I'm getting these relatively large moves, 100-point move on NQ and doing that, 2, maybe 3 times a day. Not saying that that's always going to happen, But learning to recognize your trading system, where it's going to perform and underperform, I've already done the work, right? So that's how that works. Okay, cool. So have you seen the trades that I took? Off the 5-minute time frame, I did the opposite of what my indicator was telling me. I thought that I had a reversal right here. So in my opinion, right, that for me was going to be a reversal. This is another mechanism that detects the trend reversal. And here I fired. So I took the one loss, right? It was a small stop loss, and I'm good with that. So I missed the target on this trade. I completely missed it, and the trend detector did very well on this particular trade, right? It did exceptionally well detecting that trend. So we have here, we have a detection mechanism right here. We have probably, I'm going to be stopped out there. And then we have, I fired on that. And then there was a re-entry mechanism all the way back down here. Then we had, I mean, it's working quite well. It really is working quite well. But I still don't want to deviate away from the 5 and the 21. So specifically, I'm talking about 2 trading systems. I don't want you to focus on 2 trading systems. I'm doing that because I have experience and I know what it is that I'm looking at on the chart. But the ball that I dropped was that signal. It was so clear. It is my trading system even before talking about anything related to quantitative analysis. It just is. There's all the confluence in the world for that signal to drop. Just check out where they are, right? You have one there. You have the 5 and the 21. You have the zero cross line on the TTM. It's as clear as day, guys. It's really, really as clear as day. And then you have that CVD drop right there. All 3 things lining up at the same time, you have a high quality signal. So there's that. What do we have for intraday? Now, I'm just going to go over this real quick. I'm not going to spend too much time on it, but intraday factors on QQQ. Let's go over that. We had a significant drawdown from the highs. Let's go here on the 4-hour time frame. We basically retraced almost all of this move. What are we waiting for targets on the low side? My target is going to be putting me at 385. It's 385. There's nothing else that I'm interested in unless we're trading back down there. So I talked about retracements for about an hour. Well, maybe not an hour, but about half an hour yesterday. Unless we get back to this level right here, or unless something that's related to policy changes, I'm not interested in buying anything more. I'm not interested. I have swings of mine that are down 40%. Okay. I'm nervous. I'm not going to pretend that I'm not. I'm nervous. I'm nervous for my capital. I'm nervous for my net worth. I'm not for paying my bills, but I know a lot of you are, so I want to be sensitive. But I'm very nervous with how low we can go based off of what I would consider that is a self-destructive behavior. I think it is. Okay. I apologize if you're on the other spectrum of this, or if you don't agree, or if you're just watching my videos and saying, I just want to see this dumbass just talk about his opinions. That's okay. But with where I'm at right now, I am nervous. I am nervous about how much lower we can move. There have been revised estimates that institutions are saying, because they're doing all different kinds of, they're doing pricing models. That's what they do. They're very good at pricing models. So, well, obviously that's a double-edged sword, because if they were so good, then how did they didn't predict this move lower? Because they were saying about 3 months ago, all these pricing models that were saying that we're going to be boasting another 22% to the upside as soon as we switched administration. So it looks like they were all wrong, unless I missed something here, but most of them are losing money. The only one that I see as a hedge fund manager that is doing quite well is the one and only Warren Buffett. Maybe there are a few other boutique companies here and there, but for majority's sake, I don't really see it. I don't really see anyone that saw the hammer come down the way that it is. So all that is to say is, emotionally speaking, yeah, man, I don't know about y'all, but I'm pretty emotional. For sure. I'm seeing all my money pretty much being drained out of the market. I'm sure a lot of your 401ks, IRA, Roths, I'm sure a lot of your retirement accounts, I'm sure a lot of your investment accounts are being depleted, it feels like. So it's still an unrealized loss because I haven't sold my positions. But where I'm at right now is I'm nervous. I'm very nervous. But that doesn't necessarily mean that we can't prepare for the next round. We just don't know where that round is going to be. Do we need access to this capital in the next 3 months? If you do, God help you. Because thank God I don't need access to the capital now, but it is nerve-wracking. It is definitely nerve-wracking. So where am I at? I told you guys this trick, and for the ending of most of these videos until we start turning, I'm going to still mention the trick. 521. The 521 starts reverting off of the 4 or the 2-hour time frame. 2-hour, 4-hour time frame, either or. So we got that reversion right here, right? Well, I mean, it's not a perfect reversion, but it's there. The 5 and the 21 hit right here. So maybe the 2-hour is not the best example. Maybe we just stick to the 4-hour. So on the 4-hour time frame, if I start to see that 5 and that 21 is being overcome, I want to see that on Qs. I want to see that on Amazon. I want to see that on Nvidia. NVIDIA blew my mind today. NVIDIA was trading at $106. Okay. Blew my mind. At 106, pull back to 96 is a significant move on anything. But now that we're talking about NVIDIA, holy crap. Look at that candle. Look at the engulfing candle after that rage buying that we saw here, because that's what's been happening. Rage buying. It's emotional buying. It's literally trying to capitalize on what's not there. It's not there. It's not. It's hysteric. It really, really is hysteric buying. So before we do that, we're already, at least I am, I don't know where you guys are, but we're already suffering through this drawdown. Let's look at retracements. If you don't like using retracements or you think it's hocus pocus, that's fine. You do you. You do you. But for me, I'm going to be looking at retracements, and I'm going to be looking at 3 or 4 factors that for me would constitute, hey, maybe there is still move to the downside, but how much more can I tolerate before we start looking at risk reward that's just undeniable? Okay, so undeniable risk reward on NVIDIA for me puts me at about $75. That's my current prediction or my evaluation of the situation. So that's another $20 move to the downside. What about Meta? Right, let me mention that. Meta I've already quoted at 460. 460 is going to be the target. That's what it is. SOXL, I know a couple of people have been asking me about if I'm getting into this or not. This was an intraday move. It's a crazy move. It's 30% move, right? I'm dumbfounded. I'm literally at a loss for words. I'm generally very verbose and very talkative. I'm at a loss for words for where we are now. So from intraday, peak to trough, 30% move. So what am I waiting for on SOXL? I'm waiting for market conditions to change. But specifically, I'm waiting for policy to substantiate some sort of growth in this sector. When we went through the generative AI boom, I called the bottom on semiconductors. That's not open to discussion. I called the bottom. I called the bottom on the banks. I called the bottom on a multitude of I called the bottom on China. The only thing that I didn't call the bottom on that I suffered with was on Mexico, and I didn't call the bottom on the bonds. The bonds I'm still suffering through right now. But ultimately, for all of these things that I've called quote unquote bottom on, I've been more right than I've been wrong because I'm waiting for the right market conditions. So the last time that I bought into SOXL, I'm saying this so you understand the gravity of the situation of me. Can you believe me not being interested in semiconductors? I'm the most bullish person when it comes to semiconductors because I understand that there's infrastructure behind this. I bought it the first time, I bought it $7.50. The second time I bought it at $8.20 and I let it ride. So for me to say back at $8.20 where I first bought this, I'm not interested, got to be careful, right? Don't just listen to me, but listen to what the market is telling you. Is the market really conducive right now for semiconductors or anything really tech related? I don't think that it is. It's just my honest opinion. So before I go aping into another, value ETF or value leverage stock, I want to wait a little bit. I'm already suffering with TECL. I'm suffering with it. I'm suffering with TNA. I'm suffering with it. I'm not going to pretend that I'm not. I am a little bit around 15% down on my Google position. So 15% down. How much lower can we go? How much lower can we go on Google? That's another trade that I'm going to be discussing at length because you may not buy into Google, but I definitely am. And I would urge all of you that are considering buying into value companies, I would urge you to consider Google. So the threshold lower is 130. We're trading at 144. 130 is just around the corner. We're just 1, maybe 2 tweets away, comments or press release away from Google trading back down to 130. That's the magnitude of where we are right now. That's just the reality of the situation. Next is going to be Amazon. If Amazon doesn't hold 150, you can pretty much expect it to trade back down to 140. So that's not such a dramatic move lower. It's a move lower. It's a 30-point move lower. But still, I think for where we are, acclimating ourselves to the situation, 30 points. I mean, I'm not in it. Right? If you guys are in it, I'm so sorry if that comment, it feels like a knife to the heart. And it's literally what it feels like on some positions that I'm discussing. But I would say realistically, 150 is a target area. I know post-market right now we're at 170. I don't know where we're going to be trading even in the next 10 minutes. But if we do get back down to 150, I am considering being allocated pretty heavily into Amazon. All right. Amazon is going to be a pretty big one. And then the final thing that I discussed yesterday, I'm just going to bring it up one more time, is the VIX. I'm going to be trading VX, so I probably should end with that for this video. So, wow. Let's just look at VX. That's not the chart for VX. Let's look at the 5 minute. Yeah, so 5 minute, we're sustaining up there. I have an alert already. More than likely, sometime here in the next couple days, maybe in the next couple weeks, I will be signaling the short position on VX. I'm not going to do that here on YouTube. I'm going to do that in our Discord, but I'm monitoring it pretty closely. Okay. If you have any questions or anything that you would like to be outlined or talked or discussed about in the next video, just leave it in the comment section. I want you all to pay attention to the types of trades that I'm taking, why I'm taking them, so you can start participating and analyzing trades similarly to what I'm doing. Okay. You don't have to copy what I'm doing exactly, but it is a system that it's quite tight knit, right? There's a repeatable process to it, and you can follow along with it so long as that you will have confluence factors. Look at some sort of volume information. Look at some sort of moving average. Moving averages do work quite well. You have a lot of noise when it comes to the moving average. No one is debating that. There's a lot of this going on, right? But how do you filter that out? I've already figured that out for you. You use the CVD and the TTN. So if you're using those, these are all free indicators, right? There's nothing that's going to cost you on this. So just using that and doing some mental trading that I talked about in my exercises for a lot of the playlists and the videos that we're discussing recently, if you just take some mental trades and you see, okay, this is working for this reason, I think you're going to be a little bit more prepared on the mental front of taking these positions. I'm losing my mind. I'm losing my shit on a lot of these swings, but I know that we're going to be better off in, I would say, the medium to longer time frame. We're not going to be better off in the shorter time frame. So don't expect me to come here on any platform and tell you everything's going to be fine and buy. If I'm not buying, then I'm not going to be expressing that and putting that energy out into the world. When I start buying, I'll start talking in that tonality a little bit more, okay? So anything that you guys want to ask or want to confirm, please feel free to do so. But if not, I'll see everyone tomorrow.